Welcome back to this edition of The Tax Lawyer. My guest is managing partner with Wood LLP in San Francisco. He is the tax lawyer writing for Forbes magazine, among other publications, Robert W. Wood. Rob, welcome back.
Thanks.
And we are talking today about how to distinguish between income and a gift. And you've wisely used John Edwards's "it's a gift, not a campaign contribution" defense as a good example. It seems pretty, it would seem intuitive that one would, find it easy to decide whether something is a gift or whether it's income, but it's not necessarily that easy in all situations.
I'd say, if the facts are really clear, then it's clear, but in the real world, often they're not. As to using John Edwards as an example, I don't know. I don't know if I was wise to use that example. The difference between
entertaining anyway.
Well, entertaining, I hope, but the difference between campaign finance laws and tax laws may be quite substantial. But you do kind of see a common theme, which is, yes, we got the money for something, but what was it for? And I guess as I read the articles anyway, that's a key part of Mr. Edwards' defense, or will be a key part of it. So in the tax world, it does come up a lot, and sometimes I think the sort of gift versus income line comes up in quite silly ways. So for example, if I render a service for someone, handle a tax case or something, and then they pay me $10,000 for helping them, and then I claim on my tax return that it's not income, it was a gift, therefore it doesn't need to go on my tax return. Again, that's a pretty silly argument. It's really laughable because obviously it was for services, and the sort of criteria that we would use to evaluate whether it could be a gift would be things like, is this person, in this example me, am I a natural object of somebody's bounty? Am I a family member? Is this person that I helped in the tax case, is it my grandfather who would normally be making gifts to a grandchild, this kind of thing. But in commercial transactions where you have someone saying, oh, this is a gift, it's not income, as I say, it's pretty laughable. But apart from those kinds of extremes, you can actually see it come up quite a lot, and in ways that where they're sometimes, the way families work, documentation may not be so good. So sometimes you can clarify things in the past that occurred, without any kind of nefarious actions. You might be able to memorialize what was done, like, dear grandfather, did that money you gave me last year, did you mean it as a gift, or did you mean that as paying me to watch over something for you? That's not a silly question to ask, and those kinds of things do come up in tax cases.
It's still hard to clarify, but the intent can be one of the most important things, right?
Absolutely. Absolutely. And we when we talk about gifts, obviously one sort of index about is something a gift is, was it treated as a gift by the parties? Was it intended, Scott, as you say, as a gift? Was it reported on gift tax returns? That can be a big issue. Unfortunately, that tends to be an under reported kind of thing. People are not very good, most people, about reporting on gift tax returns. And so it doesn't necessarily mean it wasn't a gift if it wasn't reported that way, but it still might be.
All right, Rob, we appreciate your time. Rob Wood is the tax lawyer, a managing partner at Wood LLP in San Francisco. Thanks, Rob.
Thank you.
This is another edition of The Tax Lawyer. Thanks for watching.